In this video, I'm going over escrow. And when I first started in this business, escrow, it really confused me a lot because it has so many different meanings. So in today's video, I'm going to help you out and go over each meaning of escrow. And let's go ahead and get into it. Okay, so what is an escrow account? Well, an escrow account is a financial arrangement where a third party holds funds. And that means a third party, that's a neutral party, and escrow is the third party. Okay, so, and this helps ensure security and trust in the home purchase because a third party is holding the funds, not the lender, not the seller, not the agents. A neutral party who has no interest in the property at all is holding all the funds in a secure location. And they are used for holding deposits, taxes, and insurance payments associated with your mortgage payment. Now, there are two types of escrow accounts. So there's the purchase escrow account, and this is used during the home buying process and essentially for holding the funds for, deposits and whatnot. Okay. Then there's the mortgage escrow account. And this is the second type of escrow account. And this is used after the purchase. And this is going to be used to pay your property tax and homeowner's insurance every time you make a mortgage payment. So you never have to worry about your homeowner's insurance or your property taxes going past due. So let's talk about escrow during the home purchase. Okay. So you, the buyer, you're going to deposit your earnest money into escrow. So anytime you get in a contract on a property, you have to put a deposit down. Typically, that deposit is 1 to 3% of the purchase price. That's even if you're doing a zero down payment assistance program. You still have to put some type of deposit down. So when you do that, those funds sit in escrow. Now, the escrow agent who works for the title company or escrow company, they're the ones who hold the documents and funds. They make sure that all your disclosures, the purchase agreement, everything associated with the purchase, as well as your deposit, are held in the escrow account. Okay. Now, the funds are released only when all conditions are met. And that's when, yes, you're about to get your keys. That's when the funds are released, meaning that the sellers agreed to move forward, the lenders agreed to move forward, the buyer has agreed to move forward. That's when all the funds can be released. Now let's talk about escrow during the closing process. Now, this is where the escrow officer will coordinate with all parties involved. They're going to coordinate with all the agents, the seller, yourself, and the lender. And they will review and ensure all the paperwork is complete and all payments are complete. Has everyone deposited the funds that are needed? Has everyone paid the appraisal? Are all invoices collected? That's what the escrow officer will do. And then once all that is done, they disperse the funds to the appropriate parties. And that means that they're going to pay off any liens that are associated with the property that you're seeking to purchase. They're going to issue out the commissions to all the individuals involved. And then once that's done, they record the legal documents with the county. And once everything is recorded with the county, that's when your name is recorded on the deed and you are the rightful owner of the property. Before we move forward, if you're seeking to get pre-approved, there are 3 ways you can access my online application. You can scan that barcode on your screen, or you can go to my website right there, Home Loans with Duane, and you can click on the link within my bio, which is the 3rd way. When you go to my website, you'll also see an opportunity for you to go ahead and join one of my webinars I do twice a month. If you'd like to get a little bit more education on the home lending process, I host these twice a month. You just scan the barcode, register your name, and then I'll see you at one of my webinars. Now let's talk about the escrow account after closing. And this is where the lender will collect the monthly payments for the following: for your property taxes and your homeowner's insurance. And what this means is that the lender will pay these bills on behalf of you, the borrower. So when you make your mortgage payment, not only is your principal and interest paid, but your taxes and insurance are also paid, and they'll never go delinquent if you choose to have the escrow account. And this just helps to ensure timely payments and avoid large lump sums, because if you don't do the escrow account, property taxes are due every 6 months. You have to pay for 6 months worth of property taxes. And typically homeowners insurance is due once a year. So you have to pay a full year premium up front. If you have this escrow account, then every time you make your one mortgage payment, they will pay your property taxes and your homeowners insurance. Now let's talk about the benefits of both accounts, both the escrow account during the purchase and the benefits of the escrow account after the purchase. So one is it protects you and the seller during the transaction. Should you decide to cancel at any time during the transaction, because a third party is holding the funds and not the seller, you're going to get your money back. You don't have to fight. You don't have to go to court or anything like that, because there's a neutral party holding the funds. Now, for the escrow account to make your mortgage payment and your taxes, insurance, it just makes sure that they're paid on time every month. So it gives you just a peace of mind. Now, this creates a neutral space for holding funds, but also it adds transparency and security for all individuals involved. Now, because there is an escrow officer and there's this account that's holding your funds to pay your taxes and insurance, there's going to be applicable fees to make sure that they stay afloat and the company doesn't close down, right? So these fees are paid to the escrow company for managing the account. That's one. And you'll see that these fees are typically split between the buyer and the seller, and that varies by region, but you're going to see these fees on the loan estimate and the closing disclosure. So then you'll know who's paying what you're responsible for, and what the seller is responsible for. And depending on how you negotiated it, whether you ask the seller to pay all your fees or not, you're going to see this on the loan estimate and on the closing disclosure. All right, let's summarize everything that we went through. So escrow accounts are vital to securing a smooth real estate transaction, again, because, they're the security blanket for everybody involved. And we should be thankful that they're around to help us with this. I don't know, it would be a difficult process without them, knowing that you gave your deposit to a seller and you want to cancel. Now I want my money back. That's just an ugly situation, right? They're also used both during the purchase and after for managing taxes and insurance. And they provide safety, transparency, and peace of mind for all parties involved. There you go. A brief description on the escrow account. I hope that was useful for you. If you are working with the escrow company and you'd like to chime in and give a little bit more information, I'd love for you to comment below. If you'd like to have that 30-minute Zoom consultation, you can scan that barcode or go to the one link within my bio. And please like and subscribe if you feel this information was useful. And I'll see you on the next video.